Shaping the global economy, from China's rise to cryptocurrencies and oil. The history of the global economy is a complex tapestry of interconnected events, decisions, and developments that have shaped the world as we know it today. From the rise of banking in Renaissance Italy to the emergence of China as a financial superpower, the world's financial landscape has been defined by monumental shifts. Understanding these transformations requires looking at key events, industries, and innovations that have influenced global economies. In this exploration, we will investigate four crucial factors: China's rise as a financial powerhouse, the birth of modern banking in Renaissance Italy, the emergence of cryptocurrencies, and the role of oil in shaping the global economy. China's rise as a financial superpower. In recent decades, China has transitioned from an isolated agrarian economy to the second largest economy in the world, rivaling even the United States in terms of economic output and influence. This transformation is not merely an economic success story, but a profound shift in the global financial order. Rapid economic growth. China's rise as an economic giant began with the reforms introduced by Deng Xiaoping in the late 1970s, which moved the country away from a centrally planned economy to a market-oriented one. These reforms, alongside China's subsequent accession to the World Trade Organization (WTO) in 2001, enabled the country to integrate itself into the global economy. The result was staggering growth. China's GDP grew by more than 10% annually for several decades, lifting millions out of poverty and transforming it into a global manufacturing hub. This economic expansion was driven by a combination of factors: cheap labor, rapid industrialization, and a focus on export-oriented growth. However, China has also invested heavily in infrastructure, technology, and education, which has allowed its economy to shift from low-end manufacturing to high-tech and services. In the last decade, China has moved from being the world's factory to a leader in fields like artificial intelligence, 5G telecommunications, and electric vehicles. Global influence and financial power. China's economic ascent has not only been characterized by growth within its borders, but also by its expanding influence on the global stage. As China's economic weight grew, so did its role in global trade and finance. China is now the largest trading partner for many countries, including the European Union, Japan, and the United States. The Belt and Road Initiative, BRI, launched in 2013, represents a pivotal effort by China to expand its influence across Asia, Europe, and Africa. By investing in infrastructure projects like railroads, ports, and energy plants, China has positioned itself as a global financier, reshaping trade routes and economic ties around the world. Another major development is China's growing role in the financial sector. The establishment of the Asian Infrastructure Investment Bank, AIIB, in 2014, and the opening of Shanghai's financial markets to global investors reflect China's ambition to create a global financial system that is less reliant on Western institutions like the IMF and World Bank. Moreover, the rise of the Chinese yuan, renminbi, in global finance has been significant, with it now being one of the 5 most traded currencies globally and part of the IMF's Special Drawing Rights (SDR) basket of currencies. The birth of modern banking in Renaissance Italy. The foundations of modern banking can be traced back to Renaissance Italy, where the intersection of culture, trade, and commerce led to revolutionary changes in the financial world. During the 13th and 14th centuries, Italian merchant families laid the groundwork for banking practices that would define the global economy for centuries. The Medici and the rise of banking. Among the most influential of these families was the Medici family of Florence. The Medici Bank, founded in 1397, became one of the most powerful financial institutions of the time, enabling the family to amass great wealth and political influence. The Medici's banking operations were innovative in several key ways. Firstly, the Medici pioneered the use of double-entry bookkeeping, a system that allowed merchants to track both credits and debits in a more organized manner. This practice, which was further refined by Luca Pacioli, a friar and mathematician, laid the foundation for modern accounting practices. Double-entry bookkeeping not only made financial transactions more transparent, but also allowed for more accurate tracking of debt and profit. Secondly, the Medici and other Italian bankers introduced bills of exchange, a precursor to modern checks, that allowed merchants to transfer money across regions without the need for physical currency. This revolutionized international trade, allowing merchants to conduct transactions over great distances with relative safety and efficiency. Additionally, the Medici were among the first to use interest-bearing loans, enabling them to lend money for long-term investments and personal gain, a practice that would become central to the growth of modern economies. Banking and the Renaissance. The development of banking in Renaissance Italy had far-reaching effects, both on the economy and on culture. The vast wealth generated by banking allowed Italian families like the Medici to patronize the arts, funding some of the greatest works of the Renaissance. Artists like Leonardo da Vinci, Michelangelo, and Botticelli were supported by wealthy patrons, many of whom were bankers or merchants. This relationship between finance and art created a symbiotic environment where economic prosperity fueled cultural and intellectual achievements, leading to one of the most productive periods in European history. Cryptocurrencies and the future of money. In recent years, the rise of cryptocurrencies has emerged as one of the most significant developments in the world of finance. Bitcoin, the first cryptocurrency, was created in 2009 by an unknown individual or group under the pseudonym Satoshi Nakamoto. Since then, cryptocurrencies have gone from being an obscure technological experiment to a global phenomenon that has reshaped the concept of money itself. The rise of Bitcoin and other cryptocurrencies. Bitcoin was designed as a decentralized digital currency, meaning it operates without a central bank or financial institution. This key feature, underpinned by blockchain technology, allows for peer-to-peer transactions, secure and transparent record-keeping, and the elimination of intermediaries. Bitcoin's decentralized nature also means that it is not subject to government control or monetary policy, which has both its advantages and challenges. In the years since Bitcoin's creation, thousands of other cryptocurrencies have emerged, including Ethereum, Ripple, then XRP, and Litecoin. These digital currencies have continued to evolve, with some platforms introducing more sophisticated features like smart contracts on Ethereum or improved transaction speeds on Ripple. The rise of decentralized finance, DeFi platforms, which allow users to borrow, lend, and trade assets without intermediaries, has further bolstered the prominence of cryptocurrencies. Cryptocurrencies have attracted widespread attention from both individual investors and institutional players. In 2020 and 2021, Bitcoin and other cryptocurrencies saw a surge in value, driven by increased adoption, speculative investment, and growing interest from major corporations like Tesla and Square, which have invested in Bitcoin. The role of cryptocurrencies in the economy. Cryptocurrencies have raised several important questions about the future of money. One of the most intriguing aspects of cryptocurrency is its potential to democratize financial systems. With cryptocurrencies, individuals can access financial services, like transferring money, saving, or investing, without needing a traditional bank account. This could potentially open up financial inclusion to billions of people in developing economies who lack access to traditional banking services. However, the rise of cryptocurrencies has also posed challenges for governments and regulators. The anonymous nature of cryptocurrencies has made them attractive for illicit activities, such as money laundering or tax evasion. Furthermore, the extreme volatility of cryptocurrency markets makes them a risky investment, and critics argue that they lack the stability necessary for widespread adoption. Despite these concerns, cryptocurrencies are seen by many as the future of money. Central banks around the world are exploring the concept of central bank digital currencies, CBDCs, which would combine the benefits of digital currencies with the stability of government-backed money. As technology continues to evolve, it remains to be seen whether cryptocurrencies will become mainstream or whether traditional currencies and financial systems will adapt to coexist with these decentralized digital assets. The global economy has been shaped by numerous events, innovations, and transformations throughout history. From China's rise as a financial superpower to the birth of modern banking in Renaissance Italy, from the emergence of cryptocurrencies to the oil-fueled geopolitical struggles of the 20th century, These events have defined the trajectory of global financial systems. As we look to the future, understanding the economic history that has brought us to this point will be essential in navigating the challenges and opportunities that lie ahead.